Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap. Our Morning Leap session is our pre-market trade plan setup, where we take a look at the market structurally. We look at a macro to micro view, and then we drill down, set up our trade levels and our targets for the day, and what our main hypothesis is. My name is Doug McKay. I'm the founder of Quantum Leap Futures. This is a subscription room. We do these morning sessions each day, and then we do live trading and live analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are a retail trader operating in a self-organized learning environment. Past performance is not indicative of future results, and the trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence and your own trade metrics. If you want to get a hold of me to find out of having a free trial, send me an email to quantumleapfutures@gmail.com or contact me through Skype, Doug_McKay. I'll be the one from Windsor, Ontario, Canada. And then if you want to see more of these videos on YouTube, there's close to 300 days up on YouTube. Do search for Quantum Leap Futures, and then if you like what we do, follow me on Twitter @crazy2. All right, so let's take a look at the news first. Now I'm cautioning everybody. We just had a holiday yesterday, a banking holiday, and we had a bit of a downturn day. This morning, unemployment claims missed. We had more unemployment claims than expected. But more importantly, we've got Yellen speaking right at the open, and then we've got Jolts at 10. Then we've got Evans speaking at 10:15, Crude at 11, Halden speaking at 12, and then Dudley speaking at 12:15, 30-year bond, federal budget balance, and Fisher. So we're going to have news throughout the day, and I think if there was one day, if you were struggling or you were new, that this would be a dangerous day to be trading, this would probably be it. I don't like the fact that Yellen is choosing to speak right at the market open. So we're going to have probably a wild day today. Yesterday we were looking for a rotational day. We weren't looking for a lot of expansion and range because we weren't anticipating that we'd get any OTF participation because the banks were closed, and that's precisely what we got. What was surprising is the size of the rotations that we got. But we for the most part just chopped in around that 74 area and fought the key line in the sand there at 74.25. We had a good day. We had a fun day. Didn't make a huge amount of money, but we paid the bills, and it was the last trade of the day was kind of fun. We took the break of the 2070 into that measured move down to 67.50. We missed it by 2 ticks, and that was a fun trade. But it was a good day. I mean, we had a lot of fun. All right, so what I like to do is start my day out with a very basic concept. It's basically taking a look at the trend in the macro to the micro. I start with a very simple candlestick chart, a 9 EMA, a 20 SMA. I'm looking for slope and separation and where the trend is being challenged on each time frame. Fantastic run we've had. We had some weakness come in. We closed below the 9 and the 20 in August and September. October we took it back, and now we're trading above the 9 and the 20, and we're getting slope, not separation, but we do have the possibility of a continuation of a trend day. Our trend does not get violated in the long term until we get below the 2012 area. I'm watching the 2017, but the trend itself is not violated until we really get it back into the 1900s. Going to the weekly, we had this downward trend. We took it back in October, violated the downtrend. We've got a start of an upward trend. We do have a naked cross down here at the 2030. Remember that our average true range for the weekly is 67.31, and our weekly ATR target to the downside is 20.30.50. So we could still come down. We got a bit of a technical gap going on right here on the weekly. We still have room to come down and close the 2030 without expanding our weekly range right now. But the overall trend is still up on the weekly. Going to the daily, we came down. We had that strong trend going up. We had the Mr. Sneaky with the tech gap. We closed the tech gap. Now we've come down and we're challenging the 20 SMA, and currently right now trading below it. So we are challenging and violating the trend on the daily. So smaller time frame is starting to roll over. Let's take a look at the intraday. You can see that we've had this downward trend. They started to accelerate it. Then they moved it back up above the 9 and the 20, failed to hold, and moved back down. And now we're getting continuation of this trend down. We did not cross the 9 over the 20. We failed, and now we're getting continuation. So on the 4-hour, the trend is still intact and to the downside. Same thing with the 1-hour. We started to accelerate the trend, created a technical gap. Mr. Sneaky closed the tech gap, tried to get and hold above the 9 and get above the 20, failed to hold it. Now we're getting continuation of the trend to the downside. Getting a little bit of a technical gap down here on the 1-hour. So a gap close will take us back up into the 2068.75 area on the 1-hour. Going to the 30-minute, all the same story. We do have acceleration of the trend to the downside on the 30-minute, and then 15-minute, same thing. So as we move lower and lower into the smaller time frames, the trend is rolled over, and we're starting to get acceleration of the trend to the downside. Coming up and trying to get back above the 9 here at 63.75, but failing so far. The key level for us today is going to be the 60.50 area. If we get below that, then I think the bears are going to get aggressive, and they're going to go for the year open down at that 20.55. We do have a naked cross above us, 20.68.70. 75. There's one up here as well at 73.75. Just going to check the 15-minute. I was trying to get into a gold trade this morning, so I'm a little bit late. Got in, got funded, got taken out, fired another bullet, got in, got funded, got taken out. So I think they're going to come down to the 74 area, and I'm going to try again there. No naked crosses there that I can see. There's one up here, though, 20.8325. These naked crosses above are telling me we still have room. We have unfinished business above still. So, although we're trending down, this one really got taken out. That one's taken out. That one's taken out. Okay, so there's nothing more in terms of naked crosses, but we do on the shorter time frames have some naked crosses to the downside. All right, let's take a look at the structure. All right, so we're currently right now back down in around balance down here after we gapped up and we broke out. We came up, we held this balance in around the 64.75 before they took it up again, accepted value higher, took it up again, accepted value, tried to hold, value up here in the 97, couldn't hold, came down to the 64.75, rallied back up to the 80.50, couldn't hold, and now we've come back down, and they're not finding the same value here at the 64.75. We've gone a little bit lower tonight. We put in a new weekly low. Our weekly low was 62. Now we have a weekly low, I think it's 61 something. We'll take a look at it in a minute. But they're having a hard time holding value now at 64.75. If we get back below 60, more specifically, I'm going to move this down. More specifically, you can use the 60 as a preliminary, but if we get below 59, then I really think, I don't know why this is here, it should be here. I think we're going to get a move down into the 55 and test the year open. And anything below 55, I'm looking for them to come down and test the lower side of balance down here. And what is our key line in the sand? Anything below 49.75, I'm looking for 37.75, which is the retracement, 50% of the significant breakout candle, and a move down towards 36. This area of the profile, all the way from 49 all the way down to 27, is very blunt, and I'm expecting a lot of chop. So really, if we can't hold 59 and they give up the year open at 55 and they take the bears take control, I'm looking for them to come down here and in the next week or so and just chop around in this area between 49.75 and 27.50 and mature and determine where fair value is in this area. If they can hold the 59 and rally back up into the 64, accept value up here again and get above the 65, which is the value area low of this longer term, this is a 10-day, or now it's 11-day, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. If we can get above the 65 and get back into that value, then I'd be looking for them to slowly work their way up through to the 74, close out some of those naked crosses, and then see if we can get back above what was our key line in the sand at 74.25. It is now the line in the sand above at 74.50, and then get a move up into the 78.25, possibly move back up into. We still have undetermined fair value up here between 84.25 and 78.25. So if we get above 74.50, I'm looking for them to come back up here to see if we can get another composite VPOC shift. 78.25 is still the most traded price going all the way back to 2013. So we got some clear levels today. The problem is we've got Fed speaking, and making a lot of noise today. So I'm really worried about seeing some wide rotations today. Let's take a look at the overnight and start setting up our levels. All right, so we just put in a new overnight. It looks like we're going to put in another one, so it's going to be hard to immediately start setting up our levels to the low side. Our ATR target to the downside, our overnight high is 77.50, and our 20-day ATR is 22.71. So our ATR downside target, guess where it takes us? Right to the year open. No surprise here. Actually, 54.75. All right, so we definitely have room to go and test that year open today, and it looks like they're going to go down and do it. Our overnight high is the 77.50, which happens to be one tick below our value area high from yesterday at 77.75. Again, I've got to wait to see what our overnight low is. So we're just going to leave that alone and let them see if they can find a floor there. 63.50 is our overnight VPOC. This is going to change. I don't need this right now. Just get rid of some of these right here. 57 is going to be a level. I've got to wait and see what we're going to do in terms of the overnight low. So I'm going to start working on the upper levels first. So of course, 65 and a quarter to 64.50 is going to be a trade area. Want to be above 65 and a quarter to get long, into the 66.50. I would actually be targeting the 68 in the range from yesterday's low. And then inside the range, we've got the naked close at 69 and a quarter. And then just above, we've got the value area low at 70.50. And then inside value, it's going to be all about coming up and testing the key line in the sand above us, which is at 74 and a quarter. It also happens to be our VPOC. So I'll be using this, and it's rare that I use a naked VPOC as a trade level as well as a target. But I am going to use that because if we come up here and we accept the 74 and a quarter and get above 74.50, I'm actually looking at the 75 and a quarter. Anything above 75 and a quarter, I'll be looking for them to go take out the overnight low and test the value area high here at 77.75. And then above that, target is going to be the 80.50 again. I'm going to use 80 and front run it because that's the HVN from the upper distribution from yesterday. And I'm going to move this up so it encompasses the 78 through to 79 because I got to worry about this LVN right here. And then of course above there, range high at 82.50, and if we get above there, I'm looking for a move back into that 84 and a quarter. And then our levels above there get pretty simple. We've got 90.75 as a trade area. We got them all set up already. All right, so we got 90.75. Our week open is 92, and then we still have this naked close, naked VPOC at 93. That is a value area high for the 11-day micro composite, and then all our same targets are all the same to the upside. All right, so to the downside, still making, I'm missing some trading here, crap. I wanted to get short below that 60.75. So they're coming down to test this, this 57. You know, we're going to have a huge gap. Okay, if we opened up in around this 58 area, our close from yesterday was 69 and a quarter, and we're trading right now 58 area. We got 11 and a quarter point gap. It's very rare that you'll get a gap fill this large, especially if we get below 15. So what we have to look at is the possibility of a half gap fill. And right now, let's say we get 57.50 and 69 and a quarter. A half gap fill is going to be around 63. 63.50. So our half gap fill is going to be a move back up into the overnight VPOC. 60.50 is going to be a trade area for me. If we get above 60.50, I'll be looking to get into it. And then all the levels stay the same below us. We're coming back down into the areas we were expecting to come down. Key line in the sand for us today off the open is going to be the year open itself and our ATR downside target. We've almost ran the range of our downside ATR target. I'm thinking we might find some balance here at 57.50. So let's see what our 20-day ATR target is off of the current low, which is 57.50 and 22.71. Brings us up into the 80 and a quarter. Oh, wrong one. All right, so we don't really need this, and we're actually making new low 80. So we're going to bring this down 2 ticks. This is looking very weak right now, gang. Look at gold. Gold's now coming down to that key level. I'll be taking another swing at gold in the 74, 75 range. Let's take a look at gold right now while we're waiting for this low to be put in. We got 1, 2, 3, 4. We get down into the 55. Look for them to defend the 55 and try to take a long from 55 back into the lower Keltner line on the ES right now. Give you something to trade while I'm trying to do this. I hate when they're making a market move while I'm doing these sessions. This is what costs me money because I can't participate. So we've broken out of the balance here. We're now below the range low at 83.20. We're coming down and we're coming into this area down here, which is the 74.70. This is our key line down here. If we break this, all bets are off on gold, and I think we're going to see a much bigger move down. But I am going to take a final swing on gold down here because we've moved too far too quickly, and I'm hoping to catch a run back up hopefully now into the 1088, 1095 area, and maybe even finally get a move up and to test the 1100 again. So I might just skip out of here in a minute to try to trade this. So our overnight low so far is 56.50. Let's put it in. And that will move our ATR target to 79 and a quarter. All right, so in terms of my hypotheses, obviously I think they're going to come down and test the year open today. If they can't hold the year open, I'm looking for them to come down, target that value area low, the value area that runs from February the 5th through to August the 19th. The value area low is down at 51 and a quarter, and test the 49. These are the two areas that I'll be looking for responsive buyers to step in. If they do not hold 49.75, then I'm looking to short heavy into 45, 44 area, and possibly even come all the way down into the 37.75 area. If they hold the 55 area or 49.75, I'll be looking to buy these areas and looking for rotation back up to test the 60.50. Above 60.50, I accelerate into the half gap fill and the overnight VPOC, and this overnight low is not valid, and look for them to go up. So I did put it in the wrong area. The overnight low is 56.50. So I'm looking for them to take out the overnight low or expand it. We still have 15 minutes, and then come down and test this year open, and then hopefully bounce. If we don't, I'm looking for further push down to the 49.75, and then look for responsive bias from there and start rotating us back up towards that 63.50 and a half gap. If we get above 65 and a quarter, then I'm looking for them to go run to the range low and take out the gap, which is very rare. This is a secondary hypothesis. Otherwise, I think we're going to chop around between this 49 and 75 this morning, or possibly 63 to 65 would probably be the bigger range as Yellen. And they're going to go put in a new overnight low right here again. But that's going to complete our morning session. I want to jump off here so I can concentrate on trying to get into this gold long. As always, trade well, trade safe, and we'll catch you on the flip side, and I'll catch you at the open.